Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, Taylor Riggs, counting you down to that closing bell. Here to help take us beyond the bell, our global simulcast team, a team of one. Tim Stenovec, without the tie, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide to parse the most crucial moments of the trading day. And Tim, this was a day where actually all of the indices open higher on the day, but all of them right now in the red with the exception of the NASDAQ.
Yeah, and the NASDAQ certainly the outperformer. Hey, a big thank you to Apple and Amazon for that. Look, guys, the Dow is off of those session lows. The S&P 500, though, looking to snap a 7-day winning streak here. That's the longest winning streak since August. The Dow, it's looking like it's going to close down for the first time in 5 sessions. Again, we're off of those session lows, Caroline, but still looking like we're going to finish in the red for the Dow and the S&P.
It's been such a weird day, hasn't it? From the start, we had oil at 6-year highs. We had concerns about inflation, worrying about what the Fed might do. Oil then comes off the boil. It's now in the red. And yields, really, it feels like, Taylor, today is a story of what the bond market's been up to.
An kind of day, Caroline, particularly when you talk about tech leading the gains, that defensiveness, because yields just continue to come in. You're now down 7 basis points on the 10-year to a 135, a 198, and I'm taking a look at the 50 and the 100-day moving average on that 10-year, just barely holding it in. I keep hearing if that breaks, you could be looking at 1% first to retest those levels. Before you're looking back up to 150.
Yeah, and we should point out, folding into all this, of course, you have dollar strength once again. Of course, that's playing a big factor into, of course, what you're seeing in the commodities space here. Getting the closing bells here in New York. Let's take a look. Dow Jones Industrial Average, 34,577. That's down about 211 points, down 0.6%. The S&P looks like it's going to settle in the red, down about 9 points or 0.2% here. The Russell 2000, that's your big underperformer on the day, down 1.4%, excuse me, here on the day. And of course, the big outlier on the day, that remains the NASDAQ indices, both of the composite and the NASDAQ 100, going to finish up roughly about 0.2%. But a lot of that is really owed to 2 stocks. That's Amazon finishing higher by about 4.5%, Apple up 1.5%.
Yeah, really interesting to see that, Romaine. I know you're going to talk about this in just a second, but Apple having a great day and also Amazon having a great day. Certainly not all the fault of Andy Jassy, only in his second day as CEO, of course. But also because of what we learned about the Jedi contract going to Amazon. Or excuse me, getting pulled from Microsoft and being split between Amazon and Microsoft.
Yeah, and as you talk about some of these big tech companies, how much of that is also a bond story? Because you're really seeing that play out on a sector level. I hate to break it to our radio audience. When we took a look at the gainers and the decliners, there is some red in the gainers, which sort of hints at how not very broad-based today has been. It is technology, real estate, and utilities. So really those bond proxies are in the lead. You're up 0.3% to almost 2.25%. You do have some losers in the gainers, but you go down to the bottom of the screen, and it is really, Romaine, sort of that rotation out of value as banks, autos, and energy. You're off 2.5% to more than 3% on the day on a sector level.
All right. Normally, Carol Massar does the gainers here on the day. She had a few too many wine coolers over the 4th. So I'm going to pick them up for us. Take a look here. You got Apple shares right now closing up about 1.5%. This is the best day that we've seen in quite some time. In fact, the highest we've seen on Apple shares going back to January. And in fact, Amazon closing at a record high. And in fact, the percentage gain right now, 4.7% higher here on the day. That's the best day that we've seen for Amazon shares going back to November of 2020. And of course, if you had $1,000 that you invested back in November of 2020, well, you'd have more money today. That's all you need to know. CrowdStrike, Palo Alto Networks, all of these cybersecurity stocks getting the bid today. CrowdStrike closing the day up about 5%. And Newegg, I guess this is the newest meme stock that everybody's bidding up 42%. Why? Who knows, Tim? But it's up.
Yeah, I don't know why. Who tries to explain the latest meme stocks? Even people who are in the Reddit forums don't know what the latest meme stock is going to be. Romaine, can you answer that?
Yes, you buy your computer. You want a mouse. You want a fancy
I was thinking
keyboard,
that. I mean, that's old school.
You ever one of those plugs? I mean, you always need a plug every time you buy one of these computers, and it's never the right plug. And then they show you a plug, and it's like $100, and you're like, why? Because they're like, it's gold plated, and you're like, I'll just take the $2 plug. That's
Okay,
Newegg.
so there's Newegg, one of the gainers today. Romaine got the gainers. I got the decliners today. Let's talk a little bit about Didi. Didi Global, the parent company of Didi Chuxing. This is, of course, the Uber of China. This is the big story today, guys, plunging more than 19% after Chinese regulators announced that probe, Taylor, into Didi. It also pulled the app from app stores, this coming just days after that $4.4 billion IPO. Uber is the second biggest shareholder in Didi, falling today by just over 1.7%, Caroline. Microsoft, hey, you know what? I got to tell you, this was red when I was doing this earlier. In the words,
busted.
I know, totally busted.
Letting us down, too.
It's green. It could be red. It's completely unchanged.
Yeah, they should make that like
as
gray.
Taylor says, it's orange. But we talk about the Pentagon killing that Jedi Cloud deal. Remember, that was the $10 billion
Is Caroline
deal.
still here?
was awarded. I
is
can't hear.
Caroline?
What's Romaine saying?
I don't know.
Caroline, I'm going to go ahead and skip IBM, which was lower fractionally today. Just send it on over to you.
Yeah, they had a poor day on Friday, didn't they,
Yeah,
as they
it did.
lost their key president.
Yeah.
Let's have a quick look at what's happening cross-asset, people, because I'm looking at an FX story that sort of tells the story of the day. For me, it tells a story of underlying concern within these markets, a risk aversion. The dollar up 0.4%. It bounced up as the day progressed. We have instead Norwegian krone and Canadian dollar, both in the downside as oil dropped. Dollar strength speaks to, of course, that caution, that risk aversion, because oil prices spiked higher to a 6-year high. We had China and the concerns there in terms of regulatory risk. Let's go across to commodities, because Brent crude actually came down from that high, maybe because of the dollar strength, maybe because we just thought the 6-year high in oil's prices just unsustainable, off by 3% on Brent crude as we await what OPEC Plus might do in terms of future production. Gas oil down by 3%. We have got heat so much, the temperature's roaring fiercely across the United States at the moment. That's, of course, put pressure, though we see on some of the soft commodities. I see iron ore off by 1.4%. But red across your screen on commodities as we have dollar strength. Green across your screens if you're looking at sovereign bonds. The yields there getting crushed in Europe. Austrian bonds, 7 basis points lower. Netherlands, we saw this flight to safety and to the havens in Europe as well as in the United States, Taylor.
It is green because it is priced higher, yield lower. It's a rate of change kind of day. You're now down 6 basis points, 7 basis points. Really, Caroline, across the curve at a 136 to 199, really below that 2% level, certainly catches my attention. And Tim, what's so interesting is it comes on a day when you saw a lot of flight to safety within big tech in the U.S. But that was certainly not the case when it comes to Chinese tech. I mean, we're taking a look at the Golden Dragon Index down 3%. I was taking a look at the China Qs, which is, well, the Chinese version of the triple Qs here in the U.S. And it is just the regulatory crackdown and a fear that Beijing is really coming to break up big tech.
Yeah, you have to wonder what this is to what end, right? When you have a country effectively saying, hey, we are actively discouraging our homegrown companies from listing on U.S. exchanges. And I wonder to what extent this actually fits in with the way that China wants to grow.
Yeah,
go ahead, Romaine.
Yeah, I mean, I'm not sure that this is a surprise. I mean, they've done this before, I guess.
Right, but it was a surprise to
surprise
Didi investors today.
Well,
and over the weekend.
Yeah, but I mean, there's a lot of these risks that were sort of baked into that. I guess what was a surprise to me was the reporting that we had out of Bloomberg News that apparently that the Chinese regulators had actually approached Didi about 3 months ago, saying that maybe you want to delay this IPO until you resolve some of the issues that whatever China wanted resolved. And the fact that that wasn't communicated, at least not publicly to investors, that's a bigger cause for concern here. And I think if you're an investor in some of these Chinese tech companies, you have to start to wonder anything else coming down the pipe, whether the due diligence has really been done and whether you really want to go out on that limb. It wasn't just Didi that got slammed. I mean, you pretty much go down the list of these big China tech names. They all got slammed today. A lot of people reassessing, Caroline. Well, thanks for coming back, Caroline. Reassess, Caroline. Here, she's back in her chair now.
Back in my chair.
I always get worried when I don't see her in her chair.
You know, palpitations when some of us are on our desks because we're here most of the day. Meanwhile, I mean, you're right though, Romaine. Like Didi,
she still owes me a slice of pizza.
He bought donuts today as well, which was really nice. Didi is sort of so emblematic of what's happening in terms of China, because not only does it hurt, of course, caution about buying into Chinese companies when they do list in the US, but also hurts some of the big US holders of these stocks. I mean, of course, it does affect Uber in terms of its share price. SoftBank, remember, their venture arm has been really long Didi as well, so they're another one that's going to be impacted impacted by all of this. Many sort of theorizing, and we don't like to do conspiracy theories here, Taylor, but there is this thought that, you know, this is targeting the US investor base rather than the local investor base.
A lot of investors saying that, and quickly here, I'll just say another risk on the horizon away from big tech has been, well, pushing forward to that FOMC meeting minutes, of course, which we'll get Wednesday, Tim, and really some concerns of, are we talking about tapering, and is it going to be even keeled between MBS and Treasuries?
There are a lot of conspiracy.
Yeah, look, well, certainly the big question is to what extent is the Fed actually thinking about tapering, and the more hawkish tone that it took last month, and we'll certainly get a little bit more insight there. But Alex Tanzi has a new article out today that I encourage everybody to check out, and it talks about the stickiness of rental price increases.
Yeah.
They've gone up significantly in the first 6 months of the year.
Has anyone tried to renegotiate?
Exactly. That's what I was going to say. What happened to the idea of, you know, where we were 6 months ago, 8 months ago, when everybody was going in and renegotiating those leases because it was such a good time?
I know, Tim. If you had paid $1,000 in rent 6 months ago, you know what you're paying now today? It's like $30 million.
Not in New York City, my friends. Not in New York City. Well, that's going to do it for our cross-platform coverage this afternoon. Guys, thank you so much for joining us on Bloomberg TV, Bloomberg Radio, and, of course, on YouTube.